Look closely, if you can even track it. This isn't just data, it's the pulse of the global economy, a frantic, blinding blur of numbers. But this isn't human trading, not anymore. What you're seeing is something faster, something other. Welcome to the world of high-frequency trading, where Wall Street isn't run by suits, but by algorithms making thousands of decisions in the blink of an eye, faster than you can even register this sentence. These are the invisible systems that have quietly taken over. If my system crashed as much as a human brain trying to remember all this, I'd need a hard reset every 5 minutes. These machines, they just keep going. They're the unseen hands, manipulating markets with a precision and speed that human traders could only dream of. A vast, intricate web of code, executing orders in mere microseconds. Think about that, a millionth of a second. It's almost magic. But what happens when those invisible hands lose their grip? When the code designed for perfection makes a single catastrophic mistake? Could billions of dollars, trillions even simply vanish, gone, in an instant? It sounds like a dystopian nightmare, a digital ghost story. But this isn't fiction. It's a very real, very terrifying possibility. Because in 2012, a single minuscule error in a system just like this wiped out a multi-billion-dollar firm in just 45 minutes. Gone, kaput. 45 minutes. How is that even possible? Right now, an invisible war rages. And no, I'm not talking about your latest gaming match. I'm talking about the financial markets, where algorithms, not humans, dictate trillions. I'm just a stickman in here, but even I know these systems are wild. Welcome to the brainstorm of algorithmic trading. It's a literal arms race for speed, where fortunes are made or lost in the blink of, well, not even a blink. We're talking microseconds here. A millionth of a second, that's the currency of power in this world. So how is this ultra-fast, ultra-complex beast built? Think of it as an intricate, multi-layered digital fortress. At its core are the servers, the literal brains of the operation. These aren't your average gaming rigs. They're hyper-optimized machines packed into data centers, often located mere feet from stock exchange matching engines. Connecting these brains are the networks. We're talking dedicated, low-latency fiber optic cables, often laid in the most direct lines possible, sometimes even through mountains or under oceans, just to shave off a few picoseconds. Imagine an order, a financial signal, a decision to buy or sell. It doesn't just appear. It's born in one data center, flashes across these fiber highways, hits another data center, gets processed, and executes. This journey happens faster than you can say high-frequency trading. Algorithms interpret incoming market data, prices, volumes, news, and make decisions based on pre-programmed strategies. These aren't just simple rules. They're complex predictive models, constantly learning, constantly adapting to find the slightest edge. It's a system of systems, built in layers. One algorithm might detect a trend, another executes the trade, a third manages risk, and a fourth optimizes network traffic. Each layer relies on the others, creating a seamless, terrifyingly efficient machine. If my system crashed as much as a human trying to remember all this, I'd need a hard reset every 5 minutes. On paper, it's a perfect fortress, impenetrable, lightning fast, and seemingly infallible. But even the most sophisticated systems have vulnerabilities, tiny cracks in the digital armor. Peki ya bu sistemlerden biri en kritik anda kendi içine çökerse? Every single day, trillions of dollars, literally trillions, flow through the digital veins of our world. These aren't just numbers on a screen, they're the lifeblood of economies, managed by an invisible architect, code. But what if this all-powerful unseen force has a mind of its own? A ghost in the machine lurking in the shadows of its own creation. Even the tiniest, most insignificant character, a misplaced comma, a forgotten semicolon, can trigger a chain reaction so catastrophic it defies belief. Imagine a complex financial algorithm responsible for moving billions every second. One wrong if statement, and suddenly the system goes rogue. Humans think they're so good at catching errors. If my system crashed as often as a human brain trying to remember where they left their keys, I'd be obsolete. The danger is amplified by legacy code, ancient, often poorly documented code, built by developers long gone, still humming beneath critical infrastructure, a digital time bomb. And then there's the deployment process, the moment new code goes live. It's a high-stakes gamble, every single time. One wrong flick of a switch, One missed configuration, and a minor bug can escalate into a market-shattering event. A single error, a single deployment gone wrong, can ignite a financial firestorm, wiping out fortunes in minutes. This isn't theoretical. Back in 2012, one firm lost $440 million in just 45 minutes. Not because of a hack, not sabotage, but a simple, terrifying coding mistake compounded by a catastrophic deployment failure. This was more than just bad code. It was a horrific deployment error, a ghost in the machine that devoured millions. Next time, we'll expose how this mistake materialized and how it dragged the markets into chaos. 4:45 minutes, 400. Remember Knight Capital? 2012. A single rogue algorithm nearly vaporized an entire firm in less than an hour. But that's just the tip of the iceberg, isn't it? Imagine the intricate, invisible dance of algorithms battling in microseconds, executing millions of trades faster than any human could even register. This robot war moves an estimated dollars daily, a delicate ecosystem built on pure, unadulterated code. But what if the code breaks? What if that glitch wasn't contained? What if it hit a major bank, a pillar of the global economy, not just a trading firm? Or worse, what if multiple firms simultaneously experienced a catastrophic or a coordinated malicious cyber attack? We've seen glimpses, the of 2010, where the Dow plunged almost in minutes, only to mysteriously recover. That was an accidental scare, a system hiccup. What if it was malicious, intentional? The market wouldn't just recover. Trust, the very bedrock of finance, would evaporate. Money isn't just numbers on a screen, it's confidence. And confidence, once shattered in a globalized, interconnected system, is almost impossible to rebuild. Humans think securing a network is easy. If my system crashed as much as a human brain trying to remember its passwords, I'd need a hard reset every 5 minutes. The truth is, these HFT systems are walking on a razor-thin wire. So after Knight Capital, after the flash crash, what did the world learn? New circuit breakers, tighter regulations, better oversight, supposedly. But are they enough? Or are we just patching holes in a dam while a bigger, more sophisticated digital flood gathers force, waiting to overwhelm us? Is a bigger crisis inevitable? Or can we truly secure the invisible battlefield where trillions change hands every single second? Imagine a financial titan losing nearly $500 million in just 45 minutes. That was Knight Capital in 2012. A single, rogue algorithm unleashed chaos, a glitch that cost them a staggering. Their system, designed to execute trades at lightning speed, instead bought high and sold low, thousands of times a second. An automated feedback loop of financial destruction. But what did we learn from that near collapse of market confidence? First, regulations tightened. The SEC introduced rules like the demanding pre-trade risk controls and financial safeguards. Next, testing became paramount. Firms now invest heavily in rigorous simulation environments, stress testing algorithms against every conceivable market scenario, even the impossible ones. And human oversight? It's been reinforced. Automatic kill switches and human-in-the-loop protocols are now standard, designed to halt runaway systems before they trigger a wider. But what about AI itself? It's a double-edged sword. AI can detect anomalies, predict risks, and optimize trading with unparalleled efficiency. Imagine AI identifying subtle market shifts, preventing the very glitches it might one day create. It's a powerful tool for stability and for disruption. But an AI's mistake could be catastrophic, propagating across interconnected systems faster than any human could react. If my system crashed as much as a human brain trying to remember all these regulations, I'd need a hard reset every 5 minutes. So what's the human role in this increasingly automated future? Will machines eventually control everything? Perhaps, but the decisions about how these systems operate, what risks they're allowed to take, and when to intervene, those remain profoundly human. The Knight Capital incident was a brutal reminder. Technology, no matter how advanced, is only as good as the human intelligence and responsibility behind it. The future of finance isn't just about faster algorithms or smarter AI. It's about smarter, more vigilant humans guiding them. Because ultimately, the ultimate safeguard in a world of zeros and ones is the thoughtful, ethical, and ever-present human factor. A delicate balance, always in flux, always demanding our attention.